Opendoor store jump. How high can it go? After watching this video, you're gonna understand bull case and bear case, and you can make your own decision about buying, holding, or selling Opendoor stock. So Opendoor stock over the past month is up over 370%. Year to date, 59.75%. 6 months, 84.06%. But it stayed down 78.71% over the past 5 years. It was down more than 90%. Now it's much better. So could it be the next Carvana? Right? Carvana is turnaround story. Look at this. Beautiful, beautiful. It dropped from the peak of 2021 over $340 to only $4, less than $5. Look at it. That is 75 times within 2 years. So some people are talking about the next Carvana is Opendoor. Is that true? Welcome to World Traveling Millionaire Investor and Option Trader channel. Where are you watching from? Comment down below. So, Opendoor, there are some cases that strongly support Opendoor stock reverses. Then we're gonna look at it in a short while. But you know what? If you got it, congratulations. Right? On July 17, 1.65% year to date. So basically, this is like my Patreon member. I sent it to my Patreon. So on July 17, right? July 18, over the 120 days, it hit 2.2852. So about 38.45% gain within a few hours. Within a few hours, it just jumped like crazy. And on July 21st, it hit 4.86 and 195% gain in 1 day. So if you could catch it, that's great. But it dropped after this. So is that over? I don't think so. I don't think it's over. Look at the past 5 days, it dropped because they have earnings coming in within 2 weeks, right? And they are expected to report positive adjusted EBITDA the first time in 3 years. 3 years. 3 years, and if they projection forecast beat expectation, then this stock could go up more. Go up more. Maybe over $3, $4. And remember, they used to be over $30 stock at the peak of 2021. So there is a similarity. At the peak of 2021, after that, because of inflation, the Fed raised the interest rate, which is bad for real estate and the car market, right? Carvana, they rely on interest. So really bad. So it went down, just downhill. Look at this. And Carvana the same. See, 2021 is a peak. After that, the bear market started. Then it just went down like crazy. And also the interest rate, because the interest rate got really high as well. So how did it revive? Because one reason is because of CEO projection, very positive, right? Another thing is this gentleman from EMG Capital, he said Opendoor is the next Carvana, and he used to own Carvana. So he was one of the earliest hedge fund manager who predicted Carvana turnaround, and he sold it around $130. So he missed quite a lot. So he bought it around $15. So he missed quite a lot, but not bad. You know, it's almost 10 times. But Carvana is like almost 100 times right now, from $4 to almost $400 right now. Right? He said Opendoor could be $100 stock. Right? This stock price of 82. That's his prediction. Remember, whatever anybody says, don't listen to it. Just make your own decision. It's really important. And you should understand that this gentleman almost shut down his firm. Because when interest rate went up, Carvana Opendoor crashed, which were his position. The billionaire investor, they withdrew the money. Usually investors, they could not withstand. They don't have the stomach to lose 80%, 90% of money, which is very normal, right? So he almost shut down his firm. So now he's wants to get his timing right. The last time his timing was wrong, right? The Opendoor went down. He thought it would recover pretty quick. No, it took like a few years. Now could be the right time. And what do I think? I have bull case and bear case. Bull case, interest rate going down. Are they sometime at the end of this year or next year? This is just a matter of time. Now the trade deals getting finalized, so we can kind of estimate there is not so much of uncertainty anymore. So which is good for stock market. And positive adjusted EBITDA, right? So that's very good. And cash flow positive as well. Cash flow positive. So when it achieves cash flow positive and becomes profitable, like net income positive, the stock gonna take out like crazy. But stock usually takes out before they really become positive, net income positive. So if we are bullish, then we want to get it before that, before net income positive. It's almost a monopoly in iBuyer market. What does Opendoor do? They have a national real estate iBuyer market. They have a system, they have an algorithm. All sellers have to do is they just type in their address, they answer a few of their questions about the house, then Opendoor made an offer on the house. Then of course Opendoor gonna send somebody to check out the house, make sure everything looks good, as described in the description that seller put in. Then they can buy your house in within 5 days or 2 weeks. Anytime that you want to move out, they can do that. Yeah, very good. So of course, because Redfin and Zillow, they exist in the market. This is like almost monopoly. There is another one called OfferPad. OfferPad is like, they are not national. They may exist in some state, but they are not national. So this is probably the only national iBuyer in the market. Bear case, they have a high debt because they need to use that to buy real estate, that they need to hold it on their balance sheet. So that's going to be bear case. If interest rate doesn't go down as soon as we thought, then that could be bad for Opendoor. And if it can survive due to high debt, if it cannot survive this year, they may not survive at all. If they survive this year, next year could be pretty good. They used to have a strategy. People used to needed to use their app to look at houses. There is nobody to show the house around, and real estate agent, they don't want to show houses to the Opendoor. Now they changed their strategy. How? They are now engaging with real estate, which is very important. But they wanted to replace realtors, but they did not succeed. So now they are working with realtors. If somebody wants to sell their house, they put in their address, Opendoor made an offer, or they could use a realtor. Opendoor made a referral to a realtor because some people trust realtor more because Opendoor usually offer less. Realtor can tell them how much they could potentially get by listing with them. If they list with a realtor and they get their house sold, Opendoor get a commission, referral commission. So that's free money. They don't need to take on additional risk, right? So it's free money. Of course, there are some buyers who need cash or have to move out quickly as possible. So they're not gonna use realtor. So they're gonna sell it to Opendoor straight away. If they sell it to Opendoor, they could use a realtor as a inspection, as a probably buyer, realtor, whatever. So they get free referral commission. Opendoor. So that's pretty good as well. Now they probably have the realtors to show the houses around as well. So and also interest rate goes down, then their interest on loans gonna go down as well, which is very great news. So what do you think? Opendoor, do you think it's gonna go up more, or just stay, or just go trash? In my professional opinion, I think this is something that if you were a millionaire, you could use a few thousand, as a speculation. I would say it's an educated risk taking, right? Because you know the interest rate is gonna go down. You know that the Opendoor is gonna report positive adjusted EBITDA. They did some restructuring. They fired so many staff to cut costs. They want to return to profitability. Opendoor has never been profitable. If they start to become profitable, net income positive, cash flow positive, EBITDA positive, right? So when that happens, their stock gonna take off because everybody start looking at this as a profitable business instead of like losing money business. So that's very big difference, right? Then after that, some of the hedge funds gonna start look at Opendoor to beat the market, because if they end up perform really well, they need something magic to push their return up, right, by the end of this year. So they could possibly, hey, you know what, we still have 5 more months to beat S&P 500. How about we add Opendoor? They could possibly do that to beat performance. And they are the iBuyer monopoly. So when interest rate goes down, lots of buyers and sellers are gonna come on the market. Then they're gonna keep buying and selling. Very good for Opendoor. So what do I think? I think it could possibly go over $5. I would say short term this year. Or if it performs really well, we are looking at around between 5 and 10. 82, I think it's a little bit of stretch, because hey, let's just wait until it hit $35. Okay, if it breaks above $35, I think there's no resistance at all, so it could just shoot up. Carvana, look at this, so it's resistant at 360, so it's not breaking yet. So but then it broke lots of peak right here. It broke the peak here, resistor here. It just broke and just shoot up. Hopefully Opendoor is the next Carvana. If you want to learn more, go to Master Risk Stock Option Crypto, go to playlist. You can learn more about stock investing, call options, put options, and advanced option and other investment education. You can open a stock trading account, option account. The link gonna be in the description and comment down below. If you want to reach out to me, you can reach out to me via the link in the YouTube description and comment down below. Share, subscribe, and I will see you in the next video. Bye.